My friends, welcome back to the channel. I hope this video is helpful to you. What I want to cover today is going to be my SPY analysis. I actually took NVIDIA puts off of this setup. However, it's an A+ setup. It's one you should burn into your mind, so that way every time you see it in the market, you take it. Now, does that mean it's going to work out every single time? Absolutely not. You have to know, when is my trade potentially going to become an invalid trade. So I want to walk everybody through it. If this video is helpful to you, please like and subscribe, all that good stuff. Much love. Thank you for coming and hanging out in the video with me. If you haven't already, please follow me on Twitter, Colin_Gladman. Easiest way to keep up. I actually tweeted out these ideas today on Twitter. So that way like I'm not just, it's easy to come back and cherry pick it, but I'm also put this out there and I analyze it with my Discord team in real time. We live traded off of this. Like I said, I took NVIDIA puts off of this and it paid great. So I want everybody to have this type of knowledge. So you guys know the deal. Nothing in this video is financial advice. I just want to help you make great trades for yourself, your family, and your portfolio. All right, so SPY opens up to a little bit of a gap down today. This black line that you see right here on my screen, that's the 200-day moving average. SPY had been just kind of ribboning around it, right? Bulls didn't really want to push up off of it. Bears didn't really want to push down. We got a lot of earnings going on. Microsoft and Google's earnings were yesterday. Microsoft did great. Google did terrible. So it kind of opened up to a little bit of a gap down. So on this gap down, we got the first 15 minutes are pretty much just a straight shove downward. And what it created in this opening range is it created a really nice fair value gap. So what a fair value gap is it's a 3-candle pattern where the top candle, the first candle, if you will, and the third candle do not overlap each other. So if this first candle wick was down to here, the third candle wick was up to here, this would not be a fair value gap at that point in time. But when you don't have these candles overlap each other, they create what's called a SIBI. There's SIBIs and BISIs. A SIBI is a sell side imbalance, buy side inefficiency. And this video is not going to be covering all the aspects of that. But essentially, think of it like this. Think of it as like supply and demand, where you've got an imbalance right here, and the market wants to correct these imbalances before it continues to move on. These happen on daily charts, they happen on weekly charts, they happen on 5, 15-minute candles. They happen all the time. But what they are, I always tell my team at Discord, think of them as like little breadcrumbs, if you will, as far as where the market is potentially going to retrace. And then what you want to see is this, is this going to act as supply or is this going to act potentially as demand? So in a perfect world, you want to see it come back up and act as supply. So it's a continuation. Or you would see it come back up, then you would have it test, and then you would continue to push back up. So it's just a marker, if you will. Now, halfway in the middle of it is what's called the consequent encroachment. It's the 50% retrace in that fair value gap. So that's really where you want to see. You want to see if it's going to act as supply, you really want to see lots of candle closes below that. If it's going to act as demand, you want to see a lot of candle closes above that. So let's just kind of see what happens, right? So as we're moving here, I wanted to wait and see. I want SPY to essentially come back up and test this. And boom, here's our first test right here. So we have a strong volume push up. Okay, so overall, the volume is elevated here. It's the highest volume other than the second 5-minute candle of the day. It's the highest volume. And what do we have? We have a push up into the fair value gap and the consequent encroachment. And then that last little bit of the candle gets shoved down below that, followed up by another very large bearish candle. Now, you could enter a trade right here. I did not yet. I wanted to see, do we retest that for any reason? Now, right here, this is where, and let me go to Twitter just so you know, right? It's on the up and up watch. So this is where I tweeted it out, right? So this is where I tweeted out, we've got a moving back up here, and I tweeted out, I'm worried that we're going to catch some knives today, right? So we get up here. We clearly, at this point in time, have a nice little rising wedge going. So we have a bearish consolidation pattern the overall volume, so our highest volume candles, is going to be shoves down below this consequent encroachment. So that just shows you the sellers are all sitting right up in here. Now this is a very common fake out that you're going to see. That's why if you're using stops, I don't personally trade with stops. I just trade based off my technical analysis, but you can easily get stopped out of these moves if you entered in right here and you're like, okay, my stop is going to be right here. Then boom, these candles right here, it's just soaking up all that buy side liquidity, getting everybody out of their positions before the actual move happens. Now, here's our first real break of the wedge. Now, what I don't like about this and what I told my Discord is the volume really didn't pick up on this sell-off right here. If anything, it kind of came down here and filled this fair value gap. So I was like, gotta be patient. Gotta wait and see what's gonna go on. Then our next candle is going to be another rejection of the consequent encroachment. You closed below the fair value gap area. Yes, the volume picked up here, but this is where I was kind of like, I don't know. Then what happens? Then the very next candle, another rejection, and this time, boom, you get exactly what you want. You get the volume starting to pick up. So to take this trade, there's lots of ways that you can do it. A lot of people, they'll jump in the trade right here and they'll say, okay, my stop loss is going to be if we get back up in here into the 420 range. You could go, okay, I'm going to do the 421. Me personally, if I was going to use a stop, I would say my trade is invalid if I start to get above these previous highs back up over in here. So I wouldn't be looking to stop out or get out of this trade unless I got back above like 422, because sometimes on these rising wedges you'll see them kind of loop back up, retest here, and then you actually get the move back down. So I said this is a valid enough retest for me to enter the trade. And like I said, I was in NVIDIA puts at this point in time. I was not trading SPY, but obviously NVIDIA is a big part of QQQ, SPY, all that kind of stuff, so it followed right along with it. So now, at this point in time, you also go, okay, where are my targets? So I tweeted out, now that we got the breakouts, I would expect 352 on QQQ and 418s on SPY. Now, where did I come up with that? Well, it's pretty simple. You can use your extension tool. You can go from the top of the day to the low of the day, back to your most recent top, and the one extension's 418.53. So anywhere in that low of the day / 418, a very reasonable taking profits would be right here at the low of the day. Or, you could, depending on how much time you buy, at the end of the day, this is all up to you, okay? For me personally, I scaled out on NVIDIA and I said, as soon as NVIDIA hits 420, that's it for me. Like, I'm out at that point in time. So, which would have been right around here at the low of the day on SPY. Now, as we go through this, obviously, catch the nice move. The selling pressure, volume stays nice and heavy. Now, once you got down here to, right around that first 418 in the low of the day, you started to get, some wicks back up, started to look for some potential pivots. And you're going to see that you actually started catching those, right? So this would have been a perfect time, if you either take profits or you set your stops, and move your stops to where you're in the profit. You can also look at it as, a normal retrace on these type of moves is going to be anywhere between that 618 to the 382. So you could say, okay, if we get back above the 382, which would have been 419.82 on this move, then I'm getting out at that point in time. You can see, didn't quite get there before catching the next move down. And then, man, if you ain't trading with fibs, I just don't know what you're doing. Look, right here at the minus 2.7 or 0.27, got another real nice reaction. Then you get another flush. And towards the end of the day, I'll go ahead and just finish this out right here. Towards the end of the day, just kind of consolidating. Obviously had a lot of earnings going in, but towards the end of the day, you started consolidating in towards essentially another bear flag like this. So you would expect this move to essentially kind of, start another one of these, another leg down. So I didn't swing anything. I took all of my profits today. Completely got out, but this is just one of those, like I said, just A+ setups. So I hope this video was helpful to you. Like I said, please like and subscribe, comment, all that good stuff. The more interaction these videos get, these are the type of videos I make all the time for my Discord, and I analyze these throughout the day in live. Like I said, it was live trading with the team doing this. So follow me on Twitter, shoot me a message if you'd like to join the Discord, but please, if nothing else, learn. educate yourself. There's nothing worse that you can do for yourself, your family, and your portfolio than take an uneducated trade. Like I said, hope this video was helpful to you. I'll see you in the next one. Much love, my friends. You guys have a great day.